Assalamualaikum warahmatullahi wabarakatuh. My name is MAWADDAH binti Muhammad AZMIR and my matrix number is F1137. This is ADPA 20033 Financial Accounting 2 Session 2 2024 and 2025. So today I will be presenting about the first question, which is the mind map of the overall subtopic in this topic, which is topic 5, accounting for trade payables. So as you can see on the slide, these are the subtopics under trade payables. So we have trade payables, provisions, contingent liabilities, and contingent assets. So let's go through one by one. The first one is trade payables. So what is trade payables? Trade payables is a short-term obligations. It was recognized when goods or services are received, and it was reported under current liabilities. Next, we have provisions. Provisions is a liabilities of uncertain timing or amount. It must be probable and reliably measurable. So for example, we have warranty and legal claims. Next, we have contingent liabilities. Contingent liabilities is a possible obligations, or we call it uncertain. It was not recognized but disclosed in notes. For example, warranty with uncertain outcomes. Last but not least, we have contingent assets. So contingent assets is a possible assets from past events. It is recognized only when virtually certain. And last, it was disclosed if probable. That's all from me. Thank you.
Hi, Assalamualaikum. My name is DAMIA and my matrix number is 1109. Today I'm going to present to you guys with question 2. So the question to us is to explain that three items that have been reported in the statement of financial position. So the first one, we have account payable. The second one is loan from a bank, and the last one is warranty to customer. So right now I'm going to explain what is the function of these three items in statement of financial report. So the first one is account payable, right? What is the meaning of account payable? The account payable is the money of a company owns to its supplier or some vendor for goods and services received but not yet paid, and it recognized as a current liability when the goods or services are received and invoiced. So second one is loan from a bank. What is loan from a bank? So basically, loan from a bank is a sum up of money that a bank lends to an individual or business with the agreement that it will be repaid over time. So sometimes the bank will charge interest on it, and it reported as a non-current liability if the due date is over than a year. And also sometimes it was reported as a current liability if the due date is within 12 months. So for the last item is warranty to customer. I'm going to explain what is the meaning of that. So basically, warranty to customer is that they can guarantee provided by a seller or manufacturer that a product will function as promised for a certain period. But if the product fails or has some defect during that time, the seller must agree to repair, replace or refund it at no extra cost to the customer. It also recognized as a provision under liabilities if the obligation is probable and amount is estimable.
My name is AFIFI binti ABDULLAH. My number matrix is 1130, and I will be explaining about question 3. The situation is MAWADDAH decided to file a legal suit against one of its suppliers unethically for using MAWADDAH's name to promote their product. The amount claimed was 200,000 ringgit, and the company's lawyer is of the opinion that the company is highly probable to win the case. The recognition is contingent liability. MAWADDAH should assess the likelihood of the outcome of the lawsuit. If it is probable that MAWADDAH will have to pay out damages, it should recognize a provision in its financial statements. The second one is measurement. The amount of the provision should be the best estimate of the expenditure required to settle the present obligation at the reporting date. If the disclosed as a contingent liability but not recognized in the financial statements, the presentations are If a provision is recognized, it will be reported as a liability in the statement of financial position under current liabilities if expected to be settled within 12 months, or non-current liabilities if expected to be settled after 12 months. In the notes to financial statements, MAWA Berhad should provide details about the nature of the legal suit, the potential financial impact, and the basis for the recognition of disclosure of the contingent liability. The next one is situation 2. Orchid Berhad has been sued by its supplier due to breach of contract. It is probable that Orchid Berhad will be liable. However, the legal advisors could not estimate the liability amount reliably. The recognition is number 1, provision. If Orchid Berhad believes it is probable that it will incur a financial obligation due to the breach of contract, it should recognize a provision. The amount should be based on the best estimate of the expenditure required to settle the obligation. If it is only possible but not probable that a payment will be required, then this should be disclosed as a contingent liability rather than a provision. The presentations are: if a provision is recognized, it should be recorded as a liability in the statement of financial position, similar to MAWA Berhad's situation. The nature of the breach, the potential penalties, and the reasoning for the recognition of disclosure should be included in the notes to the financial statements. That's all about our annual financial report. Thank you very much.